Alright, so you've probably heard about max-funded IULs, right? Indexed Universal Life Insurance. Maybe there's that one person on TikTok or Instagram promising it's the ultimate financial hack, tax-free retirement, crazy growth, zero risk, and that you can become your own bank. Sounds too good to be true? Well, let's break it down. First, what even is a max-funded IUL? Basically, it's a type of life insurance that's structured so you put in as much money as possible without crossing IRS limits to build up cash value. This cash value then grows based on a stock market index, say the S&P 500, but with a cap on how much you can gain and a floor so you don't lose in a bad year. The pitch is tax-advantaged growth, flexible access to your money, and a death benefit. But here's where things get messy. There's a lot of bad information floating around, especially online. Some people make it sound like a max-funded IUL is the holy grail, better than a 401k or a Roth IRA, and that everyone should have one. That's just not true. For starters, these policies are complex. There are fees, insurance costs, administrative fees, rider charges, that eat into your returns, especially in the early years. If you don't fund it aggressively, or if you miss payments, the policy can actually collapse, and you could lose coverage. Not cool. And let's be real, max-funded IULs work best for people who can put in a lot of cash consistently for years. We're talking high earners, people who've maxed out their 401k IRA, and still want more tax-advantaged options. If you're just starting out, or if your cash flow isn't steady, this might not be the best move. Plus, the tax-free part? It's true you can take loans against your cash value which aren't taxed as income. But if you don't manage it right, or if the policy lapses, you could get hit with a big tax bill. And remember, loan interest still applies. So what's the bottom line? A max-funded IUL isn't a scam. When structured correctly for the right person, it can be a legit part of a financial plan. But it's not for everyone. Don't just buy the hype. Make sure you actually understand the costs, the risks, and how it fits into your bigger picture. If you're curious, talk to a fee-only financial advisor who can walk you through the pros and cons, not just a salesperson with a quota. Remember, with money, there's no magic bullet, just smart decisions made consistently over time. Don't fall for shortcuts. If you found this helpful, hit like and let me know what other money myths you want to see busted. Catch you in the next one.